Hello everyone, welcome to today's taxation class. Our topic is capital allowances. We had already introduced what is capital allowances and we did types of capital allowances where we started with investment deductions. We also did an introduction of what is investment deductions, and today we are doing a question from the exam which shows investment decisions. So on your screen, I'm going to share the question. Look at it, take like 5 minutes, read it very thoroughly so that we start doing the calculations on the board. So look at your screen and see the question which I have shared from one of your past papers. Okay, so that is the question which is on your screen. Kindly take short minutes, you read the question. Okay, so it is on January 2013. Okay, yeah, so it says on January 1st, 2013, Petro Limited started a business produce of bottle tops. So the following expenditure was incurred during that period. So we have the factory building, new machinery, delivery trucks, office furniture, computers, etc. So read the question, take 2 minutes or 5 minutes to read the question and get to understand what is there and be identifying what is investment decisions. What are some of the items in that question that fall under investment deductions? So remember we said these are allowances which are given basically to motivate investors in this country. So, and these ones, investment deductions are allowable deductions which are granted to those investors who build factories or who make buildings for the purposes of factory to make it to be a factory and so on. So take that time, get through the question so that we can start solving that question. I'm just giving you some few minutes to go through that question. On the board, I've just done the format for you. Remember, we also did a format on how to calculate investment deductions. So go through that question. Okay, so I understand you have read the question and understood. So let's start doing the question. So this is the format which we talked about. So remember the question says compute the capital allowances which are due to the company in the year 2013, 2014, and 2015. So compute the capital allowances. So in that question, there are different capital allowances which we discussed. The ID, the investment deduction, industrial building deduction, wear and tear, and farm works, capital allowances. So basically, from that question, in a real scenario, in a real exam scenario, we'll be able to see from that question which of the types or the items which are listed there, where do they fall? So for today, we are only concentrating on investment deduction. So we are going to highlight some of the items which are listed there, but they fall under the investment deductions. So if you look at from the first one is factory building. Factory building. So that is the first item which falls under ID or investment. ID means investment deduction, and so on. So the cost of this is we are given 5 million, 5.6 million. Okay, so 5.6 million is the cost of building that factory. So from our question, we do not have any land which was bought. So remember, we said in case you get a question which the cost of land is included in the cost of building the factory, then we deduct. But here we don't have the cost of the land. We said land does not depreciate. So the reason we are granted capital allowances is because of depreciation which occurs in the lifetime of these assets which are purchased by the organization. Then also in the investment deduction, there's also an NB, there's also a point which we also talked about. We said there are some items or there are some assets which can only be included in the investment deduction if they do not exceed 10% of the cost of building the factory. Okay, so remember we talked of the caretaker, dwelling place, the showroom, the administration blocks, the retail shops, and so on. And so you have to look from our question, do we have them? So from there, I can see workers' canteen. Okay, so not workers' canteen, I can see stores, I can also see showroom, which are there. So the two which, the additional information there, the factory building included those stores and showroom. So we said they only qualify for investment deduction if they do not exceed 10% of the cost of building this factory. Okay, that's what we said. So we said if it is more than 10%, therefore it does not qualify. So if it costs more than 10% of that, then it does not qualify. Okay, so it doesn't qualify for ID. So you need to look for a figure which is below. So then how do we do it? We say we come and we test 10%. So we have the store. So stores cost us how much? We have 600,000. Okay. So we have showroom, which since you have the question and I want you to see the board very well, so I'll and share it. So you have the showroom which is costing us around 800,000. So we add these two, we get around 1.4 million. So we get 1.4 million. So what we want is to know is the cost of this, is it more than 10 million? That's what we need to ask ourselves. So we need so first of all, even before we go further, we ask ourselves, there's something you have left here, 10% of 5.6 is how much? Okay, so this is around 560,000. So we need to know that. So we need to come here and we ask ourselves this question. So 5.6, so 5.6 million minus 1.4 is equals to how much? So the qualifying cost here is around 4,200,000. Okay, so we ask ourselves, is 4.2 million more than 560,000? So our statement says the cost of factory building, the cost of these assets, if included in the cost of the factory building, they will only qualify for investment deduction if their total cost exceed 10%, if their total cost exceed 10%. So if it does not exceed 10%, then it does not qualify. So we have to look at, is this more than this? If this is more than this, then they qualify for investment deduction. If it is less than this, then it does not qualify for capital deduction. So note that very well. We say the cost of those items, they will be included in the investment deduction if they do not exceed 10%. So if they exceed 10%, then they qualify. So they only qualify if they exceed. If they don't exceed, then they do not qualify. So our 4.2 is more than 560,000. So it qualifies for ID. And we said ID is at 10%. So 10% of this is 4 million, also is 4.2 million. So it is. So we ask ourselves, out of the question, what else qualifies for investment deduction? Remember, I gave you a list of the items which qualifies to be in investment deduction. So from our question, I can share it again. So from our question, if I look at it, I have a farm building, okay? So factory building, we have new machinery installed, that is not for ID. So delivery trucks, that is not for ID. Office furniture is not for ID. Computers is not for ID. Workers' canteen is not for ID. So whatever is, there's a machine somewhere, new machinery which was installed. So that one qualifies for ID. So sorry, that one qualifies for ID only. So out of those in the year 2014, remember we are doing the year 2013, sorry. For the year 2013, so the additional information for 2015, we are not using it here. We shall also create one for 2014 and 2015 according to our question. So we are not touching the information on 2015. So we are only dealing with 2013. So according to 2013, we only have new machinery which was installed. So we come here and we write machinery. Okay, so the qualifying cost, remember we said the qualifying cost is the cost which was incurred to buy that asset. So it was 8 million. Okay, so 100% is just 8 million. So there's nothing else. So what you need here is you just come and you add. So this is ID claimable. Okay, so it is going around 14 million 200. Okay, so that is our I don't know if I have done the correct. This is 0. This is 0. Is 8 plus 4 is 12. So this is supposed to be 12 million, not 4 million, not 14 million. It is 12 million 200. So basically we are adding 4 million, 4.2 plus 8 million. It gives you 12 million. So this is our ID claimable. So from there you have now sorted this one. Now you are good to go. You have all your marks there. So that is for the year 2013. So remember the question says 2013, 2014, 2015. So now we ask ourselves, now we are through with the ID for 2013. So we ask ourselves, 2014, do we have any information? We do not have. And since we said investment deduction is only claimable once in the lifetime of that machine, so there is nothing which we are carrying forward. So in the year 2014, there's nothing which was bought. So there is no ID to be claimed. So, but in the exam, you need to show the examiner you know what you are doing. So you need also to come here and using the same format. Using the same format. So ID 2014, you just write there, not available. You need to show the examiner you know what you are doing, not available. So you have scored your marks. But if you leave it like that, you lose some marks. So again, we go to 2015. We go to 2015. So we look for investment deduction for 2015. So let me share again the question a little bit. Okay, so 2015, what was bought? Machinery worth 1.2 was purchased and installed. The cost of installation was 320,000. A saloon car worth 600,000 was purchased. So we ask ourselves, what qualifies for investment deduction there? So remember, whatever we did for 2013 is over. So now we are in the year 2015. So we ask ourselves, what is there? We only have machinery and the cost of installation, because saloon car does not fall under, it does not fall under investment deduction. That one will go to wear and tear. So let's now calculate or do it. So we have machine which was bought, and the qualifying cost is 1.2 million. Okay, so 100% is also 1.2 million. So we also have installation costs. Okay, so it was 320. And 100% is 320,000. So ID claimable. ID claimable. So it is 1,520. Okay, so basically that is our ID claimable, and you get your clean. If the question was 20 marks or 10 marks, you get your clean around 3 marks or 4 marks. So you have seen it is pretty something very simple. You only need to identify what you need to know in your fingertips. You need to know what belongs to ID, what belongs to IBD, what belongs to wear and tear, and what belongs to farm works, capital allowances. So this is, I think, to me, this is normally the most easiest topic. And even when you get to the exam, you can even start with a question from here. You never go wrong, and so on. As long as you know what belongs where, and so on. So therefore, out of that, I'm going to give you an example, not an example. I will be sharing also a question which you are going to do back home. So that it is, we call it a take home, or something you're also going to try on yourself, so that you also get to see. So I will also be sharing that, but I will not share here because I don't have the question with me here, but I'll be sending on WhatsApp so that you will be able to do another practical question. You see if you understand, and then after that you forward me the answers and so on. So I'd like to, we have come to the end of today's lesson. So go through, listen, wherever you also find a challenge, tell me and I'll explain again and again until you get it, and so on. So thank you for your time. We had a wonderful class. Let's meet next time.